And you're on live.
All right, all right. Hey guys, I am gosh, I'm sorry. Now everybody's going. But I'm gonna go ahead and continue on. I'll wait a couple of minutes just to let people jump back on. I see we got one viewer here. I do apologize. We had some technical difficulties. I don't know. It ended. They said I ended the live, but I wasn't even touching the laptop. So I don't really know how that happened. So I'm gonna go ahead and continue on, but this is a continuation of the one that just ended unexpectedly. And we're waiting for everyone else to get on as well. So I'm gonna go ahead and continue talking about the actual S corporation. So, and what I'm going to do, just to make it, easier, I'm going to just go ahead and completely start over. Okay. All right. So here we go. Can y'all see my screen?
Yes.
Okay. All right. So listen, y'all, I got my hands in the air. Okay. Because I'm telling y'all. All right. So I'm going to talk about S corporations. S corporations are very, 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 very popular. And I say that they're popular because when people are seeking to form a business, most people are told to become an S corp, right? That's what a lot of people say with no reasoning. They have no idea what type of business they want to start, what the business consists of. They don't know anything. They just say that they should be an S corp, and a lot of people say that you should be an S corp because that's what the mass majority believe. So you just follow the crowd. But like I was saying to you, business formation is not a one size fits all. So this is not for everybody. So that's why it's important to understand the different formations and what they all entail so that you can pick the best option for you. And with that being said, guess what, y'all? S corp is not even a business formation, right? It's actually a tax election. Okay. And with that, so you're basically telling the IRS how you would like your business to be taxed. Again, it's a tax election, not a business formation. Okay. And any legal entity except for a sole proprietor and a nonprofit can elect to be taxed as a corporation or an S corp. Okay. And also, to elect to be taxed as an S corp, you must first elect to be taxed as a corporation by completing the IRS form 8832. Once you complete this form, then you elect to be taxed as an S corp by completing another IRS form, which is the 2553. Okay, with an S corp, you are not personally on the hook for business liability, right? Your personal assets are protected. Also, with an S corp, it has pass-through taxation. And what that means is the business does not pay income tax. The business profits are passed through the owners and is applicable on their own individual tax level. So they'll be taxed at their own individual tax level. Okay, so that isn't, just a general brief overview of what pass-through taxation is. Now y'all got me scared to death to go to okay, there we go. All right. Also, as an S corp, you don't pay self-employment taxes on the distributions to the owners, but you do pay self-employment taxes on the salary paid to the owners. Now, y'all hear what I said? On the salary paid to the owners. It's not an owner withdrawal. This is an actual salary, right? Because as an S corp owner, you are required. It is not an option. You are required to pay yourself as a W-2 employee of the business. Okay, and you must pay yourself a reasonable salary that's aligned with your actual responsibilities of the business. Now, a lot of people ask, well, what is a reasonable salary? And I mean, really, to be honest, there's really no actual dollar amount attached to it. But to come up with a reasonable salary, I can just give you a couple pointers here. It will be based on your experience level, your geographic location, and comparable salaries right in that field. So that's how you're going to come up with a reasonable salary. An example of that, I can say, let's say an engineer, let's say average engineer makes $100,000 a year. You can't start a business and you're an engineer and you paying yourself $25,000 a year. That's not a reasonable salary, right? Also, with an S Corp, you can't have more than 100 shareholders. S Corps must be a U.S. company. Okay, now with an S Corp, you can also transfer ownership. It is a permanent business, right? So what that means is, as the business owner, once you have passed over, your business can still live and sustain. You can transfer it over. You can sell it. It has unlimited life. It can continue to live on forever. You know, this is one of the elections that you can make if you wanted to create a legacy, right? Also, the shareholders of the S Corp must be U.S. citizens or a resident alien. Okay, and also S Corp only has one class of stock, which is common stock, right? And you must have a board of directors, right? When you elect to be taxed as an S Corp. You also must file quarterly payroll taxes. And guys, this is a big one right here. You listen. You must have proper bookkeeping. Now, you really honestly should have proper bookkeeping with all business formations, but with an S Corp, you have to have proper bookkeeping because it is penalties and stuff that can come with that, right? So you really don't want to get caught up in that. You have to have proper bookkeeping, not just turning in your actual bank statements, proper bookkeeping. Okay, so just keep that in mind. Okay, and you must also file a corporate tax return on Form 1120S. Okay, so just remember that when you're filing your corporate tax return, that's on the business side, right? And then you're going to get a K1, and that's going to be carried over to your personal tax return. So that's kind of an overview of what an S Corp is. If anybody have any additional information about it or want to talk to me or anybody else, you know, that's on my panel about business formation, feel free to contact any of us. But that's how an S Corp is set up, and that's what's required. And remember, it's not a business formation, it's a tax election. All right, so with that being said, I'm going to end it now, and I'm going to go ahead and turn it over to Elaine Capron. Let's see. Okay, just
how's everybody doing? You ready? Oh, okay.
Give me 1 second. Let me see if I can pull it up here.
So Tiffany, you saying that even if I just started my business, I should not, if I just started my business from scratch, just started tomorrow, should I be an S Corp already? Oh, let me take you off mute.
Oh. No. You should not just be an S Corp. No, not seriously though. You really should not, right? Because really, you're just starting a business yesterday, right? You just started it. You don't even have no money yet. You haven't made any money, right? So you really don't need to be an S Corp. You can't even pay yourself a reasonable salary, right? And then what a lot of people don't understand too, even just with paying that reasonable salary, right? When you pay yourself as a W-2 employee, you have to pay the Medicare and the Social Security right on that, along with your federal taxes. But because you're the employer and the employee, you're paying the total 15.3%. Right? So you have to pay all of that, you know, and a lot of times just starting out, you're really not equipped for that. And you're really just not ready for that. It really doesn't make sense. It just creates a lot of additional paperwork and a lot of additional expenses that's just not necessary at the moment.
Okay. I just thought I'd throw that in there. Mr. Lane, you ready?
No, keep talking. Because for some reason I had it before and it's not there right now. So I'm just
What you say, Miss Vivian? Can't admit you guess because they choose to.
Tiffany, you also mentioned that we would have to, when you're filing, that is the taxes for S corp due at the same time as my regular taxes, ma'am?
No, it is not, ma'am. That is due on March the 15th.
Oh, okay.
Now let me ask you all a question. Psych, I ain't got no questions.
Y'all need to come up with another question.
So again, as Tiffany just said, the S corp taxes are not due at the same time your personal taxes are. And normally, outside of the whole pandemic and everything going on, taxes day is normally April 15th. So the normal day that your S corp tax paperwork is due is normally the month before, March 15th. So you want to get that in on time, because getting paperwork in late, getting taxes in late, not having all your information, not having all the forms, those are also red flags for triggers for audits. So you want to make sure that you're on top of the game with that. And again, if your bookkeeping is in order, it makes it super, well, I won't say super, but so much more easier on us tax preparers when we're doing your taxes, because we actually have the numbers and information to go off of. You guessing how much money you spent, how much money you made. Oh, let me just check my Square account. Okay, Square is fine. But what about your expenses? You giving me bank statements from 5 different bank statements and your personal, that's not going to work. So you need to make sure that your bookkeeping is in order, because at the end of the day, if the IRS comes knocking on your door, you're going to need something to prove what you've made and what you spent.
Agreed.
Missy Lane, you're
So
on mute.
are you saying that if I bring in just my Square account and don't have everything all together, that, I mean, you wouldn't take it? Or do I just need to have it in a more decent order? Or is that something that you would just charge me extra for?
Charge you extra. No, to make sure that we are accurate.
Seriously.
I mean, to make sure we're
Seriously,
actually doing your taxes. No, seriously, because if you just bring me in your Square account, okay, that's telling me how much money you've made. That's perfect. That's good. But what about your write-offs? We want to make sure that you're getting the best bang for your buck. We want to make sure that you are efficiently writing off well, I won't say everything you can, because if you write off everything and you're at a zero balance, it's like, what money did you make?
Look good.
Try to go for financing, and they're like, oh, let me see your bank statements. Let me see your tax returns to see how much money you've made in the past 2 or 3 years. If you made $50,000 and you rolled off $45,000, it's saying that you only had a $5,000 profit, but you're trying to get this $100,000.
No money.
You're not going to get any money. So you don't want to write off every single thing in your business. But in answer to your question, yes, we will take the Square account, but we need to have your expenses so we know exactly what to write off to help you write off some of that money.
Yes, and before you start, Elaine, I wanted to piggyback off of that. Now, me personally, I may not take the client. You know, it's kind of on a case-by-case basis. I may not take the client, and if I do take the client, I'm absolutely charging you extra, right? Because I'm not just doing tax preparation. When you don't have things in order, I'm doing bookkeeping, right? So no, I'm not going to do a year of bookkeeping in a allotted amount of time that I have for tax preparation services, and then do your tax prep and not charge you anything extra. That just doesn't make any sense.
Now, I do offer bookkeeping cleanup by quarter. So
there you go. So you need to
come get it now before it goes up at the end of the year.
Now, I will do bookkeeping, but I ain't doing no bookkeeping cleanup. So that's Marisha. She got y'all on that.
I'll help you with the cleanup, but it's not. I'm gonna say it's gonna cost you. It ain't $25. It's not too expensive.
Right. That's interesting. Bookkeeping cleanup. Thank you.
Oh yeah, I charge by the quarter. So.
Oh, it's only a quarter?
No, I charge by the quarter. You said, Marissa, girl. I charge $300 a quarter. So right now we're in quarter 3, which means if I had to clean up quarter 1 and 2, that's $600 already before I can start working on bookkeeping, because I got to go back and figure out all this stuff, because we got to pay taxes from more than likely January to December. So I can't just start in July and you've been running a business. I'm not going to have your full numbers.
There you
go.
Got
to clean it up.
Yeah.
All right, Miss Elaine, you are on mute, my dear.
I was waiting. I was listening, and I'm thinking to myself, I'm sending Marissa all those clients because I do not charge by the quarter. And if you have a lot of transactions, then you definitely getting charged. So I tell all of my clients from day one, when you come to me to format your business, this is what you need to do to make sure you keep your bookkeeping right. And if you don't think you can do your bookkeeping, this is the person you need to call to do your bookkeeping, because if I do it, I charge a lot of money. So what you charge for the quarter is what I charge for 1 month.
I have a couple of packages. My lowest package is $287 a month.
But see, I don't like bookkeeping, so I'm going to definitely charge. I'm like, Tiffany, you're going to get charged. You need to keep tracking your books. You want to own a business. This is part of owning a business. Keep track of your books.
Yeah.
Okay. So my task right now was to talk about corporations, right? So there are various different types of corporations out there. And a lot of people don't know about them. They have advantages, benefits, and disadvantages. Tiffany already talked about an S Corp. You have C Corps, B Corps, closed corporations, and nonprofit corporations. That's just a few of them. So there are a lot of stuff out there that most people don't even know it's out there or is possible. But that comes with research, right? So when you do your research and you know what you're trying to accomplish, then that's when you know what you need to do as far as designations are concerned. Descriptions of a C Corp. So I'm going to talk about C Corps today. Unlimited number of shareholders. Their tax on its income is separately as a separate entity. So you have double taxation in there. Gives you personal liability protection from businesses and litigations. Dividend-based stocks that is easily bought and sold. Capital. You can raise capital by selling shares of stock. This is very good for if you're looking for venture capitalists to buy into your organization. And it's a commonly used by large businesses. So like what you guys were just talking about, should a person start off with an S Corp? It's a formation. There is different technical things that you have to look at when you're doing it. Each state has a different requirement. When you're starting a company, you need to know your state requirements. But when you're doing a C Corp in Florida, per se, you need to know that your corporation has to have meetings. You have to write down, take notes on the meetings. There is such a thing as not having a corporation with a whole family member as your board members. Okay, everybody, it has to have an arm's length transactions when you're doing a corporation, a C Corp at least. Now, when you're raising capital by selling shares, that is something that you're going to do if you're looking for capital to run the business or to start the business, because starting a corporation is very expensive. So if you're looking for people to invest in this is what you're starting. You're starting a corporation. You're selling stocks for a specific thing. You do have a board that runs the corporation, but then each shareholder is entitled to vote for the individuals on the board. They don't manage the business with you, but they do manage through their votes. Okay. The advantages is a separation from the owners. So under C Corp, the owners are not personal liable. Has perpetual existence. So like Tiffany was talking about, if you die, if you want to sell the corporation. This was a conversation that Tiffany and I had like a couple of days ago. I think I was driving back for a long drive, and we had this conversation. I don't understand why people start businesses and they don't see the longevity of the business. I start a business and I think I got to see how it's going to still function when I'm dead. So these type of corporations have existences past death. It will continue to generate business or income, and you create generational wealth. You create a business for your family, all of those things. It's like I said, it's attractive to investors. Literally, there is an organization now that I'm looking at that is similar to this, but they're doing so much in the state of Georgia where they're building cities and stuff like that. They have plans, but the way he structured it, it's attractive to investors. And I told him, you structured this perfectly with no business background. So there's limited liability. You can sell both economic and management rights with the limitations. Okay. So the limitations is, while I sell the stock and I'm going to get an economic benefit from it, and I do have management rights, my right is to vote people in and off the board. There are no restrictions on shareholders unless the restrictions are already in the government documents. So whatever you structure, however you structure the organization, whatever is in your government documents, when you start selling shares, that's your government documents. You really should have somebody looking at it that is a professional that can give you the legal standpoints of what you are trying to attempt to do and how it's going to impact your business. It also gives you a varied amounts of tax planning opportunities. So you can plan tax-wise on how you're going to not just expend the money, but how you're going to write things off in the business. The disadvantages: they're more complex to operate. There is double taxation. You pay taxes on the corporation pays taxes on the money that it makes, and the shareholders pay taxes on the money that they make. Okay, so there is double taxation, so that's a disadvantage. There are a lot of regulations and formalities that each state has its own. Under some states, under some of these organization formations, you can't sell the company. You literally, if somebody dies, you have to dissolve the whole company. This doesn't happen with a C Corp. There are no deductions for corporate losses. So under an S Corp, if your K1, at the end of the day, your S Corporation has a loss, you can carry that over to your personal tax return. This is not going to happen under the C Corp. Okay. Now, to nonprofits. There are different categories according to IRS 557 nonprofits: the public charities, foundations, social advocate groups, trade groups, lobbyists. When you look up 501(c)(3)s, you're going to see over 25 of them. There are different ones. They all mean something different. So if you're looking to start a nonprofit, then you need to know what type of nonprofit, what category do you fall into. I do want to address one of the misnomers I get a lot regarding nonprofits. People tell me, well, I don't want to do a nonprofit because I can't get paid. I can't make any money off of it. Nonprofits, people that run nonprofits do get a salary. I don't know why anybody thinks that they don't get a salary. I mean, the YMCA is a nonprofit organization. Everybody gets a salary. The salary just has to be reasonable. And even though there's a broad aspect on the word reasonable, you know that if you're hiring for an admin in your area, you know exactly what an administrative assistant makes as an income. There's a category for that. You know that if you're running a business, you can't take all the money out of the business and call it your salary, right? But you can take a reasonable salary for the work that you're doing. The salary has to line up with the work that you're doing. You have to also understand what type of nonprofit that you have, because the type of nonprofit that you have is going to tell you exactly how to run it and what you can and cannot do. And I'm going to pick on churches a little bit. Okay. Marissa said, don't pick on no churches, but because it happens, right? So churches do a fundraiser. You do a fundraiser and you sell dinners. That's selling something. I think Quentin, one of you guys said something about paying sales taxes. You're selling something. It changes the whole thing. It's called UBITs. QBITs. Unrelated business expense. This is not somebody paying their tithes or their offerings into the church. This is an expense. This is an expense to somebody else's. They can't write it off. And it's income to the ministry. So you have to file a 990 on that. So when I say you have to think about what you're doing and how you're doing it, how are you raising the funds, just understand that that portion of raising the funds requires you to file some type of documentation. Every 501c3 that is not a church is required to file a 990. Churches file 990s if they have UBITs. Okay. So most common types of charitable organizations are operated exclusively for religious, charitable, scientific testing, or public safety, literary, educational, and other specific purposes. They need a name, board members. You need an unequal amount of board members. They should not be related to you. You need articles of incorporation. You need bylaws with a conflict of interest in there. You need a registered agent. You need to get your EIN number. Your bylaws are specific in nature. You have to have a purpose in there. There is just so much information that you need to put in there. You need to understand that it's just not throwing pieces of paper together. You need to know when you're starting a nonprofit whether or not you are going to be looking for grants, federal grants, any type of grant, because some people, you want to start a nonprofit and you want to go the quick, short way. Well, the quick, short way takes you a whole lot longer to get a grant. It does. You have to do long form, which requires you to have, information, a 5-year review of what your expectation of income is, expenditures, right? I always tell my clients, if you're going to do something like this and where you want to take it, and if this is what you want to do with it, you need to have a CPA certify that, because at the end of the day, if you file for a grant, they're going to want to know that a CPA looked at this, so knowing what type of organization, nonprofit that you want to start, where you're going to get your funding from. Don't think that you can start a nonprofit today and ask for a grant tomorrow, because that is just like, I don't even understand that. I don't even understand it. Like, it's like going for a business loan and under any of these organizations, and you don't have any income to say that you have a way to pay the business loan back. You have no history, no background or anything. Why would I give it to you at that point?
Amen.
Okay.
So my cute face just ain't gonna secure my loan then, right?
No.
No, or your cute ponytail.
Listen.
Okay.
Listen. And I've been doing this for 36 years now. It's 36 years. I've been having people with taxes, corporate taxes, setting up corporations and all this stuff. And I just sit there and look. Tiffany knows I have stopped. People have come to me to open up companies, and I've asked them specific questions, and I'm like, I can't help you.
Yeah, there you go. That's so true.
I can't help you. I can't help you because you're not willing to do what you need to do to make yourself successful. You're going to spin your wheels and my wheels, and then you're going to come back to me and ask me why it's not working.
Mm-hmm. I'll have a wheel spending fee.
I love her, Marissa.
That's right. Marissa, listen. I got to get with you, girl. She out of
the fact that, like you said, when they want to get a grant, they can't, start the nonprofit Monday and expect $1 million grant on Friday. Mm-hmm. And that's the same, for all these different business formations. I don't know what people are thinking. You cannot start any type of business. Most people start a business. Let's just say they start the business in January, and in February they expect to get $150,000 line of business credit. It does not work like that. And whoever's telling you that they can do that is probably doing something they don't have no business doing, and that you really don't want to associate your business with that anyway. And so I don't understand how people don't Understand that. But we are here to tell you, if you want to do those things are possible, but you have to do all of the right steps. I mean, think about it. If it was that easy, don't you think everybody would be doing it? Just think about that. And that's, I hear that so much that I'm just like, you got to be kidding me. And even when people are in denial, it's like, and I have said to people, okay, so if I just came to you today and said, yo, Susie, I just started this ABC business. Yeah, I got my articles of organization. I got my business account. Yo, let me get $100,000 line of credit. I'm gonna pay you back, even though my account is a negative $3. Don't laugh. But would you give me the money? I mean,
it happens.
Would you give me the money? They say no. So why would I give you the money? Because that's how you're presenting your business to me.
Exactly.
And then it also tells me how you value your business. A business is not a toy, right? It's not a doll baby. It's not a book. You can say I'm tired of it and just throw it in a closet.
And it's not a get rich quick scheme,
It takes dedication. There's nobody like in corporate America telling you when to go to the bathroom, when to take a break, when to go on vacation. You are solely responsible for all of that yourself. So you have to discipline yourself, right? Because nobody is telling you. And that's where a lot of people fail, because they're so used to taking orders that all they did was the paperwork, but they did not feed into their self and change their mindset. You have to be dedicated.
Right.
So that's all I want to say. I ain't gonna go on and on, but I'm just saying, get it right. You want the money, get it right.
And make sure the structure set up is right.
There you go.
You have to make sure the structure is right.
Yeah.
And
like we said earlier,
you have to make sure you're doing your bookkeeping. You have to make sure you're paying
salary.
You have to do, if you're doing an S Corp or a C Corp, you got to pay yourself a W-2 income. Understand that. And on the business side, you're going to pay taxes on that. I mean, just understand what you're getting yourself into when you're doing what you're doing. Right. And literally after all this time of me sitting down and talking about structures and businesses, the biggest question is what are you starting? Are you planning on running this business until you're in the grave and not passing it on to somebody? Are you planning on building a brand? Because if you're telling me that you're building a brand, your brand should be able to be sold. So if you haven't structured your business so that you can sell your brand one day, or you're structuring it, if you're structuring it where one person decides to get divorced from somebody so the whole business is down the drain, then that's you need to think about those things, especially when you have couples going into business with one another, because you've got Jane Smith and her husband, and Joe Henry and her and then all of a sudden somebody gets a divorce and now you don't have a business because you didn't look at what your state required for you in your business. You need to know what the requirements are. And I think that's basically, I mean, we can give the fundamentals of a business and the setup and the formation, but actually the onus is on you to know what your state will require and not, because that tells me that you are a business owner. A business owner understands their business.
There you go.
And that's how I look at it. I mean, there was an article, one business owner told his board members, listen, I don't care what you do, as long as you don't lose my money. Because I know my business. Don't lose my money, I don't care what you do as long as you don't lose my money. I know my business. I have you as board members and trustees to run my business, but I know my business and I know if you're going to lose my money. That person knew what they had in each area of their business. And I'm talking, and that's Warren Buffett. Warren Buffett was
there. You go. Hey, Warren.
That man still lives in his parents' house driving his old car. Okay. He did the documentary. He was like, the car works. Why change it? I know. That's right. And
thinking like millionaires.
Exactly. If you know me, then you'll know this is my thought process and my structure. If you're going to open a business, make sure that you can build on it and brand it. Make sure that you have the right people working for you that understand how to format your business. Make sure you have the right people working for you that understands the basics of bookkeeping. Make sure you have the right person around you that understands taxation, regarding your business. You should know it, but you shouldn't have to do it yourself.
Right.
If you're
There you
doing
go.
everything yourself, you don't have any time to run your business.
There you go.
That's true.
There you go.
But you
And
should
there are-
do your own business. So
Yes.
Tiffany, this was really.
Wait, I want to say this. I want to say this too. This the last thing, y'all. We're gonna wrap it up.
Mm-hmm.
Now listen, with the Bitcoin tonight,
My baby got a bump in his door.
with the
It's not that time, Vivian, huh?
I want everybody to know, don't just start a business because you want to write off business expenses to reduce your tax liability, right? Because you have people, let me just give you an example. Somebody that's working, maybe they got a promotion on their job, so they go from making, let's say, $40,000 to, let's say, $70,000, right? Their income almost doubled. Right? They like, oh my God. So now when they get their taxes done, and even though they have children, they phased out of a lot of the credits, right?
Yep.
So they don't see a refund, at the bottom of their tax return. They are now in the red and they owe money. Because not only did they phase out of credits, they are now in a higher tax bracket. It's just so many things that happen with that. So then you'll have some people, I'm going to create a business, right? So now they're going to create this business. And they want to write off all of these expenses, right? Because they want to reduce their tax liability. That's the dumbest thing you can ever do. That's the best way I can say it, because that's not what a business is about, right? And really, when you're doing that, see, it actually hurts you, because then when you're trying to do something in the future, and now you need that business to help you, but you don't
ain't got no money.
that you
Right,
can't,
you
right?
expense it all
always
out.
in negative. So yes, you have the business, but the business is showing no profit. And guess what? The IRS will actually deem that as a hobby. You have to show profit. You can't just keep writing losses off for the rest of your life, and for your benefit. Or you can't make $400,000 in a business and then say you got, $380,000 in expenses, and you want to go buy this $300,000 house. It don't work like that. Regardless of what we see you bringing in, you showing us that you're not keeping none of the money, that you're broke, right? And that's just facts, so think about that. When you're dealing with somebody, that's doing your tax returns, and, listen, I ain't trying to throw nobody under the bus, but everybody ain't right. You get what I'm saying? So you have to think about that. When they tell you, oh, well, you know what? Now we can write this off, reduce your tax, and you're going to still get that earned income credit. You're still going to get this. No, you want to talk to people like me. You want to talk to these ladies that's on my platform, right? Because see, now that you're in a different tax scenario, we're going to show you how to reduce that tax liability, but how to reduce it the legal way without, right? Without decreasing your AGI, right? Which is your annual gross income.
So you can buy that house and not look like you only made $10,000.
You can buy the house so that you actually can retire, right? Because that's what a lot of people don't think about. Oh, I got this business, you writing everything off, and now you 55, 60, 70, and you realize you got to go say welcome to Walmart because you ain't never made no money.
In that case, I'm gonna plug this in. Y'all need to call me if you're not making enough money. If you're in debt and you ain't making enough money, then you need to call me, because that's ridiculous. Nobody should be in our community these days when we have so many things available to us. And Tiffany, you talk about that a lot. There should be nobody in debt. You should have a plan, a 6-year plan to get out of debt. You should have your business should be profitable, because then what's the point of you doing it? You should be able to pay your taxes off the business, and you should be happy that you have an increase, an overflow in your business.
Amen.
So that you can pay your taxes. People are so busy trying to cheat the government and have extra money that they're just not making it for themselves. They're actually burying themselves in
debt, cheating themselves.
Yeah, setting themselves up for failure. Swear they winning, whole time they losing.
Exactly. So it's a process, but you got to be willing to do the things that you need to do to be successful at what you're doing. And then you need to know how to do it where you are you are actually putting money away for yourself, for your retirement, for selling your business, for doing whatever it is that you desire to do. If your desire is to run a business and travel for 6 months, then do it. But format it correctly and make the money that you need to do it.
There you go. There you go.
Nicely said.
All right. Well, with all that being said, guys, we are actually done again. We apologize for the technical difficulties that we had earlier, but we are back and we were able to finish. So I hope y'all all enjoyed it. We will definitely be on again next week. So we will be posting that tomorrow to let you know what that topic will be about next week. And again, guys, remember, this is a discussion panel. So feel free, get prepared yourself, have questions and stuff available for us so that we can engage with y'all. And also, we will be doing a giveaway next week. Yeah. So make sure you tune in because we'll definitely have a giveaway next week, okay? But you have to be on and watching in order to win. All right, so with all that being said, God bless, and y'all have a great night, and we will all see y'all again on Monday at 7 p.m. Eastern Time.
Good night.